listeners. Welcome to Financial Friday with Inspire Empowerment Podcast, and thank you for joining us today. I'm Rosie.
And I'm Caitlin.
Va.
It's just little old two over here in this corner.
All right, before we get into today's topic, there's a little bit of announcements.
Hey everyone, I just want to talk about your life insurance. So keep in mind, when an individual wants a tailor suit, right? They go to the tailor, and the tailor measures the individual from buttons to cloth.
Man,
right,
that's
to fit them,
fancy.
right? To fit them, correct?
Yeah.
So your life insurance should be customized in the same manner, so that it actually fits your specific needs instead of, talking to an agent who just wants to sell you a policy. So if you have any question about that, give me and Tu a call over here. I'm vapaoher. I'm one of the licensed agent over here in California, and Tu is also another licensed agent. We represent one of the most solvent company here in the United States, and some of the product some of the product are the most competitive. So
Yeah.
we'll be able to customize something that fits your financial situation instead of giving you a blanket covers.
Yeah, no, I like that custom tailor fit stuff, right? You could just go out there and buy a suit, and hopefully you can find one that fits you right. For me, sometimes I can find a coat, but then the pants that comes with it doesn't fit, so I gotta go get it tailored and altered anyways, right? So yeah, when it comes to your life insurance and your financial needs, there is no one size blanket policy that fits you all. So yeah, if you guys don't know, you can pretty much just give us a call, reach out, comment, and we'll get back out to you.
And not all agents are trained equally. So if you're uncertain, do shop around.
Yeah.
We have a lot of case studies that we have done, and we may not be the best, but I am sure we could be as creative as you can.
Yeah, just one more thing. Va and I, we do the life insurance part because we just like helping people. It's unfortunate when I see people who have policies written for them who has way more coverage, or it's not really technically the best sound policy for them, because I mean the insurance agent just needed to make a commission. So we're not worried about the commission. We have other other streams of income, but we do this because we know what we're talking about, and we just like helping people. So that is, if you're asking why should you guys go with us, that's one good reason.
So enough about us. Let's talk about today's topic. What is it that we are talking about today on Financial Friday that is important?
Well, today we are talking about credit.
Ooh, I love that.
Yeah.
Specifically credit score, right?
Yeah, credit, and just like an overall view of what credit is. And,
So is it like credit card?
yeah, so talking about credit cards, and also like how to have a good credit. So with credit, I did not know that there were two, like the most common types is going to be installment loans and revolving credit. With installment loans, those are a set amount of money loaned to you for a specific purpose, like student loans or auto loans. And revolving credit, those are our credit cards where you can keep using it and paying it off as you go. So I did not know that there's those two.
Oh, that reminds me, I need to pay my credit card. But yes, those are the two main ones.
Okay, so what else is there with having a credit card?
I mean, you can go buy shoes and purses and
If your
Other
credit
than
line-
spending.
if your credit line is big enough, you can buy a car with it. Yeah.
I did not know that.
Yeah.
No, I didn't know that.
This is a guy named Robert Kiyosaki. He talks about buying properties with credit card.
Oh,
putting
okay.
the 20% down payment
That's
on.
that's
smart.
a different topic.
Yeah.
Yeah. But most people they'll buy like appliances for their
purse.
house. Yeah, or purse. or
Makeup.
shoes,
I'm just kidding.
go take their family on vacation and stuff like that.
But it's kind of like borrowing money that you don't have, so to buy stuff, and then you get charged interest and fees on a credit card.
Yeah.
Okay.
It comes with interest and fees and monthly payment, and if you use too much, you could accumulate a lot of credit card debt, which is bad debt, and now you have to pay it at a high interest rate.
Yeah.
Okay.
So some cards don't. So there are a lot of cards out there issued by a lot of different banks, right? Some cards have fees, right? So you got to actually pay to be able to use a credit card,
Yeah.
right? So that's called pretty much a yearly fee, right? That they'll charge you. Interest rates are all over the place. I mean, You can get some with zero introductory. You can get some as high as 29%. So it just really depends. So yeah, interest rates and fees are how they make their money. And so yeah, those are you have to be careful and you have to understand how that works. I mean, like what I was saying earlier, when you talk about bad debt, right? Um, Buying a purse, buying a pair of shoes, if you can't pay it off, you're gonna be paying interest on it. So, and at 20% interest, I mean, you buy $100 purse, you don't pay it off in the first month, 20% interest. By the time you're done paying for it, depending on how long you take to pay it, it could be $150 purse.
So the interest would rise each time if you're not paying it on time.
Well, if you're not paying at all,
Then
The
it
company,
will
the
rise
company
each time.
charge you interest on the current balance.
Oh, okay.
yeah, there's a minimum payment that you gotta pay every month.
Yeah.
And that's what most people pay, unfortunately. But they do that so that they can make interest off it. That's how they make their money. Remember?
So we're talking a specific credit card, right? So let's say that you have $1,000 credit line and you spend $1,000, and your minimum payment is only $25, and you have like a 15% interest in it. So they're gonna amortize it and charge you a monthly, and they're gonna charge you monthly on that.
Oh,
While you pay the
okay.
minimum of whatever
Okay.
balance it is. Yeah.
yeah.
Yeah, so from my understanding and what I've written is just it's generally a certain percentage of the average daily balance of your account that they charge you for. Okay.
So in Vaz example there, you got $1,000 credit limit. You spent the whole $1,000.
Yeah.
You pay your $25 minimum. By the time they add interest in it, you'll be right back up to like $999.98,
Yep.
if not over it, depending on your interest rate.
Credit it makes me like why do I need it? But that just leads me to my next question. Why do we need it?
Well,
There's a lot of reasons.
There's a lot
but-
of reasons. I mean, because first of all, I need it because I'm not a multi-million billionaire.
Yeah.
And I can't just go buy stuff. And so let's say that if I want to buy a car that's going to cost about $35,000, I don't have $35,000
Yeah.
cash. So hypothetically speaking, if I do not have $5,000 cash, I need to borrow it.
Yeah.
Right? Or I
yeah.
could get an auto loan.
Yeah,
Or
which
if-
is a installment payment.
Yes.
Or or if I have a credit card that is like $50,000 or $30,000, and the interest rate is if I like the interest rate and I don't want to go through the car loan, then maybe I can just charge it on my credit card they let me to. But it's present. We need credit because we need to be able to borrow money to make large
Yeah.
purchases in general.
And most of the time, the most important purchase that most people will take debt on is buying their home.
Yeah.
Because
Makes
most
sense.
people
Yeah.
aren't gonna have $300,000 cash laying right there, right? They
Yeah.
will go, hey, I'm gonna cash out a house. Some people do though. Some people do.
Yeah. Some people. So like I mentioned earlier, if you have the cash, technically you don't need it, but unfortunately, the majority of society don't have
Doesn't
that kind of
have
cash
it.
lying around.
Yeah.
So let's say if you want to buy a house for $300,000, you need some good credit, because if you don't have credit, then they may not approve.
They're
you.
not gonna. Yeah, they won't
or
give
like,
it to you.
Or if you have decent credit, they may give you a higher interest rate. But if you have really good credit, they give you a low interest rate, and that leads up to our next topic, right? It's the credit score part.
Yeah.
Yeah, but before we move on to that one, I just want to say too, like, depending on your financial strategies and what your goals are that you're trying to do, even if you have $300,000 down, you may not want to put that $300,000 on a house, because now there's an opportunity cost to that, right? So some people, they like to leverage other people's money and keep their cash for them just in case investment opportunities come up. So it just depends on what you want to do. Everybody's goals and situations are going to be a little bit different. So that is why credit is important. It's a risk assessment that the banks use on you to figure out who you are and your spending habits. And
The way I saw it was kind of like a report card or like a grade.
Yeah.
If you
Yeah,
got
with credit
A's,
cards.
Okay.
yeah, you get 0 or 1%
Yeah.
interest. You got an F like Rosie over here, then you get 30% interest.
Oh my
I'm
gosh.
just kidding, Rosie.
All right, and then on to credit score. We do have a few factors that we want to talk about. So for payment history, it's the most important ingredient in credit scoring. It's even one missed payment can, negatively impact your score. And lenders want to be sure that you will pay back your debt and on time. So, when they're considering you for new credit, they're going to pay attention to that.
Yeah, that accounts for 35% of your FICO score. And this is according to Experian, one of the 3 credit bureaus.
And then next we have amounts owed. Your credit usage, particularly as represented by your credit utilization ratio, is the next most important factor in your credit scores. Your credit utilization ratio is calculated by dividing the total revolving credit you are currently using by the total of all your revolving credit limits. Wow, that was a lot.
Yeah.
I
Can you
I don't
guys
know that- I don't know
explain
I don't know
what that
just
mean?
happened.
Yeah, that was kind of a lot already.
Yeah. So basically, let's use Vaz's example earlier.
Okay.
If you got $1,000 credit line and that's the only credit card you have, and you use all 1,000 of it, that's 100% credit utilization. That's gonna ding you negatively on the credit report because their risk assessment is that you're not responsible with your credit, or you are in danger of defaulting, right? Or not defaulting, but not being able to keep up with the payments. If you only use out of that $1,000 credit line, if you only use $300, well, that's 30%. And so they say, okay, well, you got a $700 cushion buffer, so you're being responsible with your credit. So they say, right? So that's kind of what they want to see, and that amounts to about 30% of your credit score too. So there's 5 main factors which the girls will go over with, but yeah, the amounts owed, it does affect your credit score too, because that's how they do their risk assessment. Like I said, that's how they grade you on your report card.
Interesting. Okay.
Yeah, and if you want to up the numbers, if you got a $10,000 credit limit and you got 5 different cards, that still adds up into the same 10,000. And if you're using 3,000 and you're at the 30%, if you're using 5,000 and you have a total limit of 10,000, then now you're using 50% of your credit, available credit.
So when you sign up for a credit card, do you get to decide the amount you want to put on there, or?
Well, usually the banks will decide that, the issuer.
It's based on income, is it?
Most of it is based on income, but then also
Okay.
there's other factors as well. Your credit score plays a huge factor. So even if your income is not very high, let's say you make $50,000 a year, but you have an 800 credit score because you've always taken care of it, right? You started with a $500 credit card, you took care of it, and you apply for a new one. You may get a $20,000 credit card, even though you only make $50,000. Or you could make $200,000 a year, but blow by all your limits, and you'll want to apply for one, and they may give you a lower one. They'll give it to you because they know you're making good amount of income, but because your credit score is low, they, either that or they're going to charge you a really, really high interest rate.
Okay, I see. And moving on with this, the third one is credit history length, and that is how long you've held credit accounts, which makes up 15% of your score. And this includes the age of your oldest credit account, the age of your newest, and the average age of all your accounts. So generally, the longer your credit history, the higher your credit scores are.
Yeah. So why do you guys think they keep track of the age of your oldest credit history?
I think it's probably because that just shows how responsible you are throughout the years that you've had that card.
Yeah.
Or how long you've been using credit and
Yeah.
how you utilize it from the very beginning.
Yeah, I think I also include like overall financial health throughout your history of credit. So, like,
Okay.
and a lot of lenders they look at that, But I mean, like I mentioned earlier, if you have the cash, you ain't gotta worry about no credit. We don't have cash, so it's important for us to learn about credit.
Yeah.
And if you're one of those with cash out there, hey, hit us up.
That kind of ties into our the fourth factor too, which is credit mix. So this is just a mixture of all your different credit cards. So I didn't know why my mom had like 3 or 4, and so I was just like, why? Like, why can't you just stick with one? But with these credit mix, it accounts for 10% of your FICO score, and I did not know that. So, and every credit card is different, right? There's different things that they offer you and stuff. So I guess a good variety of it will help boost up like your credit score and
And how the mix adds to it is like, remember, like I said, if you got that one card for 1,000, now you apply for a different one, and you got another 1,000. Now your total credit availability is $2,000, right? But it also includes car payments. When you buy a house, you got a mortgage payments. Those are installments. So installments, revolving credits, those are also included into your mix. So
Yeah, so let me add on to what Kaylee was saying about like different type of credit card, right? So I'll give you guys an example. So I shop on Amazon a lot, and my whole family and everybody else shop on Amazon a lot. So I got an Amazon Prime credit card, and there's a bunch of benefits on it, and I
Yes.
get about 5% cash back. And then I also subscribe to Smile, and Rise Inc. gets a percentage of it when I shop at Amazon, right?
yeah, so if you haven't subscribed to our Smile account, hey, go to our website at rise-inc.org, and there's a video that'll show you how to do that.
Yeah, so like, let's say that I need to buy $500 stuff on Amazon. So instead of and let's say I do have the cash, right? So instead of using the cash to buy it, I'm gonna use my Amazon Prime /Smile / cashback reward program.
And then you
on
get
my
those benefits
browser.
then.
Yeah, all those
Okay.
benefits back. All right, and then I pay off my Amazon credit card. And I get those
okay.
cash back. And later on, when I accumulate enough cash back, I could use it to buy like a a cell phone protector, or buy something something cool on Amazon.
And 5% back is
Yeah,
a really
yeah.
good reward.
We're not trying to promote that, but that's just an idea. It's just an idea how to take advantage of benefits of credit.
Yeah, and there's a lot of cars out there. Like I said, I mean, some of them they give free mileage, right, for people who are in business and travel a lot. You get free airfare tickets. You get free restaurant meals and stuff like
I
that.
did
Free
not know
hotel
that.
stays.
What the heck?
There's a lot.
wow.
Mileage was actually like some of the first feature on the
Yeah.
credit card, but like nobody really talks about that anymore because it's just not popular anymore.
Yeah. But it's still out there.
Okay.
So what do you guys think about credit score? What do you think is a good credit score? Like what number?
I don't. I actually never thought of that.
Yeah. Me either. I'm maybe above 100.
If I'm being honest, I
Yeah.
haven't even looked at my credit score. So
Well,
I'm
you know
too
what, ladies?
scared.
I don't have one, so I don't know much about it.
Yeah, ladies, and this is the importance of the Inspired Empowerment podcast. This is so that we can put the knowledge out there, so that people who don't know, they hopefully they listen and they get value of it. They learn. So a good credit score is pretty much 720 and above, right? Because it goes
Okay.
from 0 to 800. There are instances where I've heard there are people who have over 800 scores, but from 0 to 800 is the general vicinity.
If you're in an 800 club, you're good to go.
Yeah.
Actually, if you're in a 700 club, you're still good.
Yeah,
You're still
720
good,
and
yeah.
above, you are
Yep.
you are golden.
A plus.
Yes, A plus plus. If you're 719 down to 680, you're like a B. You're like a B plus, B minus. If you're in the 680s, anything below that, you're in the C range. You'll still get some credit, but then you'll tend to pay a lot higher. And when I say a lot higher, I'm talking about probably double the interest of the B rating, right?
Yeah.
At triple the rate of the 800 plus scores. So, yeah, no, I mean, I love it when you have good credit. I mean, I walk into a car dealership and boom, it's like 2.9% financing, 0% sometimes, right? Depending on the deals that they have. Versus when I was younger and my credit was messed up. I mean, I walk in and they're like, well, you don't really have negotiating power, so we're not going to knock off any money off the top for you because you're a risky loan person, right? And so
That sounds like a lot of E1s that were in the military,
Yeah.
brand new guys in the
Yeah.
military, right? 24% car loan.
yeah, 24, 19%. I mean, dang, those car payments are, and I didn't know. I was just like you guys. I had no idea when I bought my first car. I had like a 14% interest rate, 14.99 or something like that. And I bought a $20,000 used car, and I was paying like $500 something a month. And now I can walk into buy a $65,000 truck, and I'm paying $600 a month, and I'm like, I'm paying for
Wow.
triple the price of my first car, and my payments are lower.
Yeah. Interesting.
Yes, so that is why credit is really, really important, and there are tips and stuff that
Yeah.
we can do that you can do to help boost up those credits too.
And then, oh, go on.
No, go ahead.
Oh, I was just gonna say, like, I never knew where to look for my credit score, but from what I've researched, some banks, they allow you, or they show you your credit score, but then you can also look at like free credit scoring sites as well, to look for that. And with credit score too, I did not know that it is different compared to a credit report. So a credit score is the estimated number, and a credit report is a summary of how you handled your credit cards, your accounts, your payment histories, and stuff like that. So that's interesting.
And guys, I'm not picking on guys, but if you want, if you're like me, well, I'm just saying that. I'm gonna say this very clearly. I'm just gonna say it like it is. Child support goes on your credit report too.
Yeah.
So be careful out there, guys.
Yes,
I
it
did
does.
not know that.
You cannot run away from that. The systems are interlinked now. Before in the old days, I know people. I'm not gonna say any names, but they would just skip states to get away from child support. But now it don't matter where you go.
It'll follow you.
Yes, it will follow you. But yeah, no, credit score is so important because really, if your money doesn't matter to you, then who cares about your credit score? If you like paying all the interest rates and you just balling like that, hey, more power to you. But for the most of us, we don't want to pay more than we have to. So if you're in that boat that I'm in, of paying as little as you need to, then make sure that you watch and utilize your credit. And you can get your free annual credit report, right, where it'll give you the reports.
Yeah.
Most banks don't give you a report, but they will show you your credit score. Most of the banks do that now. Most of the big banks.
Yeah, like if you have
Yeah.
like a Discover card,
Yeah.
it'll show you a score. It's not as accurate, but
Yeah.
they'll show you a ballpark of your score.
Yeah.
And then if you wanna look at your credit report, you're actually entitled to one free credit
Yeah.
report a year at annualcreditreport.com. Again, you could go to annualcreditreport.com and put in your information, and you'll be able to download your free credit report and look at what is on your credit history. It's important to do that because sometime if you never bought a house before, there might be a house in your credit report.
Yeah, weird things do pop up sometimes. Sometimes it's by mistake. Sometimes it's through fraud. So it's always good to do an annual review. And like Rosie said, you may not be alive in the credit world. You may not exist.
Yeah.
So yep. Thank you guys for. We do have some announcements first before we wrap this up.
Oh, yes. So, again, we just wanted to reiterate that we will be giving away this dash cam once we hit 1,000 subscribers on YouTube. So, get your friends, family, get them to subscribe, and so that we guys can put you guys in and give this out. It's been here for a while now, so we like to say our farewells with it.
Give it away.
Yeah. Take it. You guys want it? Take it. Come subscribe. And we are still giving out our Jamba Juice cards. So what do they have to do in order to get the Jamba Juice card, guys? Rosie?
Well, if you are subscribed, all you need to do is comment down below Jamba, and then you're in the list for it. And if you're not subscribed, then please do subscribe and comment Jamba down below, and then you too will also be in the list for our Jamba Juice card here.
And we do still have all 8 of our cards. So, again, your friends, family, come. You guys can all probably get a card.
Yeah, you never know who's gonna get it, but most importantly, these things are just as a bonus. Most importantly, we hope that you guys interact with us, comment below, let us know what you guys are thinking, let us know if we are providing value for you, what we could do to add more value so that you guys can get a better base knowledge of all the topics that we talk about. That's what matters most to us, is being able to educate and also at the same time hopefully entertain you guys, right?
expose more people, to the info that we have. Hopefully you guys were able to take something from today as well.
I know the girls learned a lot about credit. I hope you guys learned a lot about credit. That's it for us today. Thank you guys for tuning in.
Bye.